Alright, so welcome to this week's market review and expectation. As I do every week, I take a look at what I was expecting in the previous week against what the market delivered, and then I also talk about what I'll be expecting in the coming week. So from the 22nd to 26th, okay, let's take a look at what I was expecting. Alright, so this is a dollar index, as I always do. We closed the previous week on this candle, alright, and all these 5 candles had not been printed, okay, and then I was looking at price actually continuing high, clearing this high, this particular high, and then running out this high, and then this particular high, right? But before that, we had encountered a volume imbalance right here, which had a retracement into our fair value gap right here with this high, so this high, right, and then this particular low. Okay, all right, then we had dropped into that particular fair value gap, I think on that particular Thursday, and then on the Friday we closed with a bearish candle. So the previous week I was looking at price continuing its high, leaving this particular fair value gap open, and then if it should even drop into it, I was looking at not going below this particular white line, which I think I talked about in the other video, that last week's video. Okay, but after the price went much lower, but then we didn't close below the lower end of the fair value gap, which is a good sign. And then on Friday we had our bullish run up. Okay, so this price action right here actually tells me price is most likely going to go for the higher, this particular high, and then we can close in this particular fair volume imbalance, and then you can reach in this high and then that high right there. Okay, so in the coming week I'm just looking at price if it should trade down probably to the high of this particular candle, right, and then we can run higher, okay, because we've actually filled in this fair value gap, okay, so we should get a support on this particular, the high of this particular candle, or if it should drop lower, I'm looking at the higher end of this fair value gap, okay, which is this candle, the low of this particular candle, right. I'm looking at that particular price points, which comes in at 1058.839, okay, from the TVC feed. Okay, we should get our support either here or on this particular level, all right, and then we should look at price going higher. So in the coming week I'm actually going for a bullish run to clear this high and this high, and then we fill in this particular volume imbalance. Let me allocate it. So it should be from the open here. To this open, right. So that's the volume imbalance. So I'm looking at price reaching in that, and then we finally run this particular high. Let's head straight into the news release to be aware of. So this is for the coming week, that is from the 29th through to April 3rd. Okay, so on the 29th we have the German prelim CPI, okay, that's 4D, and then that's a high impact, and then at 8 a.m. we also have the Spanish flash CPI as a mid impact news. On Tuesday we have the mid impact for the euro, that's the core CPI flash estimates at 10 a.m. and then at 1:30 p.m. we have the employment cost index for the USD, that's a high impact, okay, and at 2 p.m. you have the mid impact S&P CS composites, right, and then at 2:45 you also have the Chicago PMI. Those two are for the USD, and then they are mid impacts. Okay. Then 3 p.m. we also have the CB consumer confidence affecting the USD. Then firstly we have the French bank holiday, German bank holiday, and then the Italian bank holiday, all affecting the euro. So around 1:15 p.m. we have the high impact, and then that's the non-farm employment change. At 2:45 we have the final manufacturing PMI. Then 3 p.m. we have the ISM manufacturing PMI, and then we also have the OLTS job openings for the USD. Those are high impact. You have to be very much aware. And then at 7 p.m. you have the federal funds rates affecting the USD, and then the FOMC statements, and then 7 p.m. 7:30 p.m. we have the FOMC press conference. All right. So on Wednesday there's going to be a lot of volatility to be injected in the marketplace. We have to be very much aware of that. Thursday, May 2nd, we have the unemployment claims affecting the USD at 1:30 p.m. And then on Friday, we have the average hourly earning, then the NFP at that's 1:30, and then unemployment rates as well. And then at 2:45 we have final service PMI. Then 3 p.m. we have the ISM service PMI. Okay. So on Wednesday we have to be very much cautious, and then Friday NFP. So let's see what we can do with Monday and then Tuesday. Okay, Monday and then Tuesday. Then you can just watch and see what the markets will do. Okay? Because there's going to be a lot of volatility to be injected. But as it stands, as I said, I'm looking at price running out this particular high, this high right here. Okay? And then you can close in this volume imbalance, and then you can clear these highs and then that particular high. Right. So that's it for my expectation for the coming week. Let's see what market has to actually deliver, then we trade see. And then yeah, you meet again in the coming week. Thank you.